Hello, everyone. Welcome to today's Access to Capital workshop. My name is Benga Gunjimi, the founder and executive director of the Nigerian Center. I want to start with a few housekeeping announcements. First, I want to say this meeting is being recorded. If you object to be recorded, you may disconnect at this time. Our speakers would also be taking questions at some point, so feel free to ask them questions when the time comes. But before our speaker comes today, was Mrs. Vicki Davis, who have graciously given her expertise and time to support us today and to speak to us about the important topic, understanding how personal and business credit really work. I want to give a little bit of background about the organization and talk about our upcoming programs and opportunity to get involved in what we do. The Nigerian Center is an immigrant community center for the Nigerian American community. We're located in Washington, D.C., but we serve the community across the country. While we are called the Nigerian Center, our program is not just limited to Nigerians. We serve everyone. And we provide a few areas of asset building opportunities. Number one is immigration program. We hold monthly Know Your Rights immigration workshops, and we are also getting ready to open our walk-in immigration clinic in Washington, D.C. We also have a micro lending program, which we are doing a class on today on how to access both credit building loans as well as startup capital for your businesses. We know within our community, entrepreneurship is not just a luxury aspiration, it's a survival strategy for a lot of people. It's the only thing they can do, and access to capital becomes a barrier. So we're providing these opportunities. We have language classes, we have home ownership programs as well. And we also host and curate cultural programs and opportunities. On the 4th of October, the Mayor of Washington, D.C. has declared the 1st of October as Nigerian American Day in Washington, D.C. We are hosting a press conference in our office at Nigerian Center in Washington, D.C. on October 4th. It is also the time that we also officially open our clinic to the public, so you are welcome to attend if you are in the Washington, D.C. area. Our sponsor today is TapTapSend, who have been gracious enough to support this series to make it possible, so we thank them. All the videos of our previous recording are available online on the website nigeriancenter.org/media, including our yesterday's program, which is about domestic violence and immigration. Very, very engaging program. I would highly recommend that particular content as well as other programs that we've had. We are receiving application for volunteer opportunities at the center. Please feel free to reach out to us. At this time, we are all volunteer-led team, and your contributions will go a long way. We have a community partners program that involves local organizations serving the Nigerian American community. If you represent any Nigerian, any community that you think our services could benefit, please feel free to reach out to us. Please join us on Instagram, Twitter, and Facebook at thenigeriancenter.org to have updates to our programs. Consider adopting Nigerian Center as one of your charity organizations you support to. If you want to consider giving us a recurring donation, it's going to go a long way to support our programs and services. As I said, starting in October next week, we are starting our walk-in immigration clinic in Washington, D.C. for free to the community, so you can come in to the center and get legal services. And we are so excited about this. This will be the very first of such in any part of the country for our community. And we are so grateful this is possible. If you want to donate to that program so we can serve more people, please go to nigeriancenter.org/donate. We are 501c3. Our donations are tax deductible. That said, I want to turn it over to Ms. Vicki Davis, a financial expert and managing partner of Vicki Davis Group, to really speak to us about how the topic, understanding how personal and business credit really works. Welcome, Ms. Vicki Davis.
Thank you so much.
Do you have a PowerPoint?
Yes, I do.
I'm going to stop sharing.
All right.
In 1 second, we make you a co-host.
Is this my right part? Let me see. Go here. Share. Hold on. Let me stop sharing. Hold on. It's right here. Nope, it's not right there. Yeah, it's right here. Hold on, banger. I had it pulled up and everything. I don't know what happened to it. Hold on 1 second. Let me get it again.
Please take your time.
Okay. Okay, can you see my screen now?
Yes.
Okay. And let me see how many people do you have, Banger?
Right now we have additional 2 people in the room.
Okay. So if you all don't mind telling me what your name is and what your business is, or if you want to start a business, what you want to start. And then I can see how I can, go over some other stuff with you if I need to.
Please feel free to unmute yourself and introduce yourself and what your expectations are for this class.
Yeah, thank you very much. Good evening. Yeah, my
Mhm.
name is Ayobayo Babade. I'm into real estate, and so that's basically what I do. I assist individuals to buy and sell land and houses. So I'm just trying to start on my own and to be able to do that in where I am. So that's basically what I just understand how personal and business credit works, and
Okay.
how to be able to use that to just positively learn in that regard. That's
Okay.
basically what I was doing brief. Thank you very
Okay.
much.
And where are you lending from? DC, Maryland, Virginia? Where are you at?
No, from up north Minnesota.
Minnesota?
Yeah.
Okay. All right. Yeah, I have something that I can talk to you about after class, or
Okay.
during class I can bring up some stuff. Okay, and
No problem.
the next
Thank you.
person.
Hi, my name is Adura, and I am also in Minnesota. So my spouse spoke earlier. I am also very interested in business, and I am more towards the social impact side of things.
Mhm.
So not necessarily nonprofits, but
Mhm.
for-profits that might not be super on the extreme profit side. I don't know how to describe that, but so some of the things that or sectors that I've been interested in are financial, education, also looking at ways to aid immigrant life in the US as well. So just curious to learn how business credit and that part of the world works, relating to social impact businesses.
Okay. Okay. Well, I'm Vicki Davis. I'm a 30-year banker. I used to be a regional manager for TD Bank and a regional manager for Citibank. I used to run a nonprofit, and I think, no, they might be Michigan. I used to run Operation Hope, the adult center, for a couple of years. So I taught entrepreneurship for the district, for the Urban League, for a lot of different people. I'm an adjunct professor at UDC, University of District of Columbia, where I taught the entrepreneurship program. And so I've been doing this for a while. I started because when people come to the bank, they really don't know what they need or what they're asking for. And so when I got out of banking, I decided that I would help any type of way I could. So usually the bankers don't have time to help you with your credit or help you with your business credit, but I do. So I'm gonna go over the PowerPoint for how your personal credit affects your business credit. And then if you have any questions, just let me know, okay? So why isn't it going? Hold on, okay. So tonight we have some objectives. Our objectives are, and let me move this out the way. Let me minimize this. Okay, so our objectives are, oh, come on. Hold on 1 second. Okay, our objectives are, we're going to talk about the 5 C's of credit.
Ms. Vicki Davis, come back to your inbox. If you can go back to the PowerPoint.
It's not in the PowerPoint?
Now we can see your inbox, so we can close the screen and go back to the, I would just download, the PowerPoint. It seems you were sharing from your inbox.
No, I downloaded the PowerPoint. Hold on.
I'll download it and put it on full screen.
I did.
Excellent. Excellent. Okay. Now we can see it.
Yeah.
Excellent.
Yeah, I must have hit the wrong one.
Yeah.
Okay, so we're going to talk about the 5 C's of credit. We're going to talk about FICO scores. We're going to talk about how the personal credit of a business owner impacts your business credit. We're going to look at a credit report, and we're going to talk about some reporting system. I'm going to talk about non-traditional and traditional banking. Why is it not going? Okay, today. We're going to talk about how to build or improve your credit. And we're going to talk about 12 questions to ask before you apply for financing. So what's the first rule in business?
Make money.
Make money is good. What else? Dora?
Solve a problem.
Solve a problem. Very good. First rule of business is never to run out of money. You've seen a lot of businesses start, and then 3 months later, they're out of business. That's because they ran out of money. I'm telling you the absolute truth. That 9 times out of 10, they did not have a business plan. They did not make sure they would have enough money for 2 or 3 years, and they ran out of money. That's usually why the business closed. So what's the 5 C's of credit? You have collateral, capital, character, conditions, and capacity. So the first one is collateral. Usually when you go for a loan or anything, they want to make sure that you're putting up something in case you don't pay the loan back. So all it is that you're pledging the asset that you own, like your home, or if you're, say you're opening up a restaurant, you might pledge the refrigerators, the ovens, the equipment, right? And so just in case you default on it, or you might pledge your car, they're able to get some of their money back. Sometimes the guarantee is also a cosigner. So they say, okay, I'm going to vouch for this person. If they don't pay back the loan, you can get the money back from me. The second thing is capacity. We're looking at, do you have the capacity to pay back the loan? How are you going to pay me back my money? So they look at your payment history to see how you've been paying back money, or they see how much cash that you have that they could probably get their money back that way. Okay. Conditions. Why do you want the loan? Are you right now, can you explain to me what you're going to spend the money for? So when I was working at the bank, people would come in and say, oh, I need $100,000. What do you need it for? You know. No, I don't know. Do you need it for working capital? Do you need it for equipment? Do you need it for inventory? What do you need the loan for? Then we will also look at the economic conditions right now that's going on. So when COVID came, nobody was lending anybody money. I didn't care what your idea was, what was going on. The bank stopped lending money, period, because of the economic conditions of the country. Right? So if it's, say you're getting ready to buy into a say you're getting ready to buy into a franchise, and a couple of the franchisees are, I'll give you an example. Chipotle at one time was getting people sick. And if you went in right then at that time saying, you know what, I'm going to take my money and buy Chipotle, 9 times out of 10, you would not have gotten a loan, because all the other Chipotles were making people sick. So the banker's like, nope, since they're making people sick, we're not going to give you money, because right now we don't know what's going to happen with Chipotle. They might go out of business. So they look at internal factors and external factor that could, if they're going to give you the loan or not. Capital. We want to know how much money have you put into the business before we give you our money. So for example, usually since you're in real estate, you usually have to put either 3% down or 20% down, depending on which type of loan you get, right? So there's really no, and it might be 1 or 2 things out here that you can get 100% financing for a house, but I haven't seen it. So they usually want you to put 3%, 5%, something down to say, hey, I'm going to put my money in this before you give me your money. And even if you go to an investor or anything like that, they do want to know how much money have you put in, or your family has put in, to see if you don't believe in this and putting up your own money, why should I give you my money? Character. To me, this is the most important one. I always tell people when I was working at the bank, don't lie. Let me know everything. That way, if I have to talk to the underwriter about something, I already know what's going on. I used to be a mortgage lender, and people, I would ask them, well, how much do you make? And they say, I make $80,000 a year. Well, we're going to ask for your pay stubs. And so when I would call them back and say, well, your pay stub said you only make 50. Oh, well, I just wanted to make the application look good. Well, now I don't know if I could trust you or not, because you lied. You told me you made 80, so you always want to make sure that you're trustworthy, honest, and say stuff. Also, if you're starting a business or something like that, they want to know your educational background. Can you do this business? Do you have the education to do the business, the experience to do the business? And if you do, that helps out a lot. So I always give the example, since I've been a 30-year banker, if I start a nursing home, I have no idea what goes on in a nursing home. And so they would look at me to say, okay, you might own a nursing home, but then I can hire a management team that knows everything about nursing, right? Running the nursing home. So as long as I have that part, even though I'll be the owner, even though I don't know what to do, as long as my management team knows what to do, and then they might ask for resumes for your management team, so they know that even though you don't know anything about running a nursing home, your management team does. And you also need a business plan, because they want to know that you have even thought out different things, the pricing, everything, how you're going to do the marketing, how are you going to project for the next 3 to 5 years. So they want you to know you've thought of that. So you also need a business plan. So the credit report shares information from banks and lenders, investors, landlords, business, and government entities. So they look at your credit worthiness. For insurance, they look at, have you been paying your bills on time? Just because you have a car, your car insurance, I have a gentleman who's 60-something years old, never had an accident, nothing. And his insurance is so high because his credit score was so low. And so he's paying like $400 a month for a car that if he gets his credit score up, he would probably be paying less than $100 a month. Housing, they also pull credit for housing, some employment, some business needs, and some licenses also pull your credit. And anytime if you have a question, just stop me and I can stop and answer whatever question you might have, okay? So what is the annual fee? These are questions you need to ask when you're getting credit cards or getting loans. What's the annual fee? What's the annual percentage rate? When are my payments due? What's the minimum payment? Is there a grace period? Because some people don't have a grace period. Are there other fees associated? Are you going to charge me a minimum finance charge even if I pay it off every month? What's the credit limit? What is the penalties if you are late or miss your payments? And what's the term and condition? You need to look in the fine print. Read. People don't read anymore. And I say this all the time. I read everything that's put in front of me. And so you need to read the terms and conditions of whatever you're getting. So this is how the credit scoring is broken down. 35% of your credit score is payment history. So they look at how have you been paying your bills over time. That's all credit is how you pay your bills over time. 30% is the amount owed. How much money do you owe out? And we'll talk about that. 15% is length of credit history. How long have you had the credit? 10% is new credit and 10% is the type of credit. So you need to have a certain mix in your credit. So payment history. Have you been late or delinquent on payments, and do you have collections, right? If you have any missed payments, you can still come back and you can still come back and you're able to get your score back up because you don't want to miss any more payments. But as soon as you miss a payment, your score will go back down. So you want to make sure that you don't miss payments. Any payment that went through collection is going to stay on your credit report for 7 years. And say you start, say you have something on your credit report and what year is this? It's 2022. So say it came on your credit report in 2015. And then last year you decide to start paying on it again, that starts it all over again. So then if you stop again, it's going to stay on for an additional 7 years from the date you stop. So collections, anything that's in collections, goes by the last time you were delinquent in paying. Doesn't matter when you got whatever, it's the last time you paid and you went delinquent on your payment. So they start the 7 years from delinquency of payment on up. And then if you still struggling to make your payment, I always tell people just pay the minimum. You can pay the minimum every month, you're good. They're not asking for the whole amount. They're asking for the minimum. And so as long as you pay your minimum payment on time every month, you're fine. But if you still can't make your minimum payment, call the creditor and let them know what's going on. See if they can put payments on the back end. There's a lot of different things you can do. And so you just want to make sure you communicate with whoever you owe. Amount owed. You want to try paying your debt off, then moving it around from credit card to credit card. Don't close unused credit cards because that's going to make your remember length of time and then credit you have, that's going to make your credit score go down. So what you want to do is you want to start doing the 30% rule. So whatever your limit is, so if your limit is $1,000, every month you need to be under $300 and your score will go up. Even though you pay it on time, if you're over that 30%, that 30% rule. If you're over that 30%, your score is not going to, it's going to either go down because you're over the 30%, or it's going to stay the same until you get underneath that 30%. And once you get underneath that 30%, your score will go up. And you don't open, well, depends on how much you owe and what you have. Depending on what your debt to ratio is, income ratio, don't open new credit cards. Just you want to try to pay the ones you have down. Types of credit. So you want to make sure you have a mixture of credit. So they look for you to have a mortgage or an installment loan. Installment loan could be student loan or car loan. And then they look for you to have revolving credit. So revolving credit is your credit cards. So they look for either installment loans or which is the installment loan is a loan that you pay every month the same amount. So like your car note, or if you take out a loan, it's the same amount every month. So that's the installments. Credit card is your revolving. Anything that it revolves every month, it could be a different payment every month, that's revolving. And then you have your mortgage. Some people are now letting you be able to put your rent payments on there if you're renting. So I can talk to you about that too. So I know about that also. And then please don't open up your line of credit or anything underneath your child's name, because you might just mess them up. And I've seen people, when I worked at the bank, they had came in and opened up credit checking accounts and everything underneath their child's name, and then when the child got ready to go to college, they couldn't because they were in check systems, or they had the cable in their child's name and start messing up their credit. But what I do say is, if you have good credit, and I mean you pay your bills on time all the time, and you have really good credit, I added my daughter to my credit cards. And when I added my daughter to my credit cards, she already have started establishing credit, but I pay my bills on time all the time. Yes, Banger.
The installment loan, does it help if you pay more than the required amount you're supposed to pay, like a mortgage or car note, if you pay more than the requirement, the minimum requirement?
It can help. I mean, it doesn't reflect anything on your credit report. They just know you paid on time. But remember, installment loans are only for a certain period of time, and then once you pay it off, you cut off part of your thing. So like even with life asset, after you pay your loan off, if you don't have another one coming right back up, your score's going to go down about 60 to 70 point right then.
Thank you.
So you have to be careful with that.
I see.
But like your car note, you could pay to the principal to pay it off faster. And it's the same thing. When you pay off your car note, again, unless you have something to replace that, your score is going to go down. It'll come back up, but it's going to go down.
And is there a particular strategy? Is there timing to, what is the recommendation how to make that immediate switch from I'm paying this off, this is kicking in, and I'm not losing points? Is that possible?
It is, because like I said, if you have, say you close off one thing and then within the next 30 days, before the 30 days is out, you open up something else, it should balance out.
Okay, thanks.
Length of credit. Closing an account doesn't make it go away. Inactive old accounts in good standing should not be closed. Even if you get mad, I've been mad. Like I'm right now mad at one of my credit card companies because I disputed something and they said no, they gave me the provisional credit and now they took it back. I have a whole attitude with them. But if I close out their credit card, get mad and close it out, my score would go down a lot and I would be missing credit. So remember, 15% is length of credit, but 35% is how you pay your bills. So if I close that credit card, I'm losing 50% right there. So I'm not going to do it. I'm going to call them and fight that, but then we're so that's a whole nother thing. But revolving credit cards sometimes people don't use it, but I tell people just to use it every quarterly, because some credit card companies, if you don't use it, they will still charge you a fee. Remember that fine print I was talking about? Some of them still charge you a fee, and then you might get the bill in the mail and never open it, and the next thing you know, you missed a payment, and you're like, I haven't used it in so long, but they sent a fee to you, and you needed to pay that fee. So you want to make sure that you use it every quarter. Just go buy something for $10 or go to McDonald's or whatever you want to do, and then just pay it off the next month. So you just want to make sure that you have your cards active. And in order for you not to pay any interest, just pay your cards off every month. New credit. You want to have a strategy for applying for new credit. You can't apply for new credit all at one time. You will get declined from most of the people. So if you want to try to space them out every quarter or every 6 months, so I would have to look and see your credit report to tell you exactly what you need to do. You want to look at your credit card statements. A lot of people get their stuff, and I look at everything. Somebody had gotten my card, and every month for 2 months, they were charging Amazon, and they were charging something else, but it was like $10 here, $9 here, $6 here. Well, when those add up. You finished? Okay. Those add up. So you want to make sure that you look at your charges to make sure they're accurate. And you want to check your credit report. So you can sign up for the different credit report agencies to make sure that you're looking at your credit report. You can sign up for free, and they can send you alerts if somebody is trying to get into your credit. Right now, somebody's trying to steal my identity. So I have all my stuff locked. So I'm the only one that can unlock it. They even tried to take my DC taxes and my federal taxes. And so you need to make sure that you have everything locked and everything, and you might have to have passwords. Right now I have a PIN code, and that's the only way I can get my send in my federal tax return and my DC tax return with the PIN number, and they'll know it's me. So you want to make sure that you want to do that. So the cost of credit is the interest, the principal, and the fees. So you're going to pay interest unless you pay it off every month. You look at the principals, and they calculate the interest, and then you might have fees if you're late or over the limit. So let's go over some credit facts so people would know. Fact 1, checking or pulling your own credit score or report does not hurt or lower your credit rating, which is true. It's a self-inquiry. So you can sign up for Credit Karma, and you can sign up for Experian, TransUnion, and you can check your own credit. You can look at it, and it does not hurt or lower your credit rating. Credit inquiries made by companies checking your credit report to send you pre-approved offers do not count either. That is correct. So it's called a soft hit. They're looking at your credit to see it's not hurting you at all. There is not going on your inquiries. They just want to see what type of offer to send you. Are you going to be different from someone else? So that's what they're looking for. However, if you accept an offer from a credit card company or a lender, and they pull your credit to do a more thorough check, it does count. So that's when you have the inquiries, and the inquiries say on your report for 2 years. Each credit inquiry can lower your score about 5 points. However, since the gentleman on here is a real estate agent, if someone's looking for a mortgage, the best thing for them to do is just do it in a 14-day period, where it doesn't matter how many places they go. In that 14-day period, it's only going to count against them one time. And that goes for auto loans too. But after that 14-day period, then each inquiry will start to ding them and their score will go down. So understanding your credit report, you have your personal identifying information, your name, your birth date, your address, your social security number, and employment. Your credit history, payment history, balance information, current status, any public records, whether you filed bankruptcy, you were in foreclosure, you had judgments against your liens, and then it inquires a list of creditors or authorized parties that have requested your credit report in the last 2 years. So that's all in your credit report. So if you want to get your credit report, these are the 3 reporting agencies that will send you a credit report, or you can go to annualcreditreport.com. So you have that. These are all free, and then you, like I said, you could also sign up online to get a free copy of your credit report from other lenders too. So I know this is sort of blurry, sort of hard to read, but I'll go over it. So number 1 is your date of birth. So you want to make sure all this information is correct for you. Number 2 is where you live, right? So number 2 is where you live. You want to check the addresses, because I had 2 people in one day that I was helping them with their credit, and their addresses were on there that weren't theirs. And so with doing that, they were not able, they looked at it, and as we went going down the credit report, one girl, her sister used her address to get cable in her name, but this other lady, someone had stolen her identity and had a mortgage in her name in Texas, and she lives in DC and was trying to buy a house. So it's very important that you look at the addresses on there, and if they're not yours, make sure you get them all. You want to see if there's any fraud alerts on your credit report, anything under public record, if you have collections account. And then number 6 is it tells you whether you're paying on time. So it goes from 1 to 9. 1 meaning you're paying all your bills on time, and 9 means you're in collections. And so if you have a R3, that means you have your revolving credit, you were late 3 months. If you have an I8, that means on your installment loan, whether it's be a car loan or a student loan or whatever, you're behind 8 months. And then once you get to 9, you're in collections, and you might be in collections before 9, but I know you'll be in collections. So process for correcting errors on your credit report. You need to have evidence that you're going to, it says you can dispute these online or by mail. Online or by mail. Don't ever dispute anything online. That takes away your rights, because once you dispute it online, they don't have to do anything else. But if you dispute it by mail and mail in a letter, it because of the ways the laws are written, you can still dispute it, even if they say it's still yours. You can still have recourse because you did it by mail. The reporting agent has 30 days to verify, and it might come off from there, but after 30 days, if they can't verify it's correct, they're going to take it off, and then they'll send you a corrected credit report. And they will send you a corrected credit report. Now, sometimes after 45 days, it might come back, and you might see it back on your credit report. That meant they verified it and said it was yours. And if you did it by online, there's nothing else, no other recourse. But if you did it by mail, you can have the recourse, you can have them send you the information. There's a lot you can do. So reporting negative information, civil judgments are 7 years from the date filed. Tax liens are 7 years from the date paid. So if you pay off a tax lien, it's going to stay on there from 7 years from the date you paid it. Bankruptcies, Chapter 13s that have been dismissed or discharged is 7 years, and any other bankruptcy is 10 years, such as a Chapter 7. So if you do a Chapter 7, it's going to stay on there for 10 years. So if you want improve personal credit scores, you want to pay your loans and other bills on time, avoid judgments and tax liens, comparison shop for financial services. You want to keep older accounts and pay them off monthly. Avoid scammers promising to dispute items, and give it time to heal from old damage. So, personal credit impact on business. So you want to build business credit with personal liability. I know there's a lot of people out here and say, oh, you can use you can, but it's in tiers. So business credit is different from personal credit. You just can't hop out there and start a business today and go get a major credit card. It doesn't work like that. It's in tiers. And so you have to start off with a smaller tier, pay those off. You go to a middle tier, pay those off and pay them correctly. And then you go to a higher tier. So it takes a few minutes, takes a time to establish the credit with the right vendors and the right suppliers. You want to go to your local bank, whoever you have the business with, whether it's a credit union or a bank, and you want to start establishing credit in your business name. Whoever you're getting supplies for, or if you're getting anything that you're paying with your business, you can see if they can write you a letter and send it to Dun & Bradstreet. You can send it to Dun & Bradstreet. So what are lenders looking for you to apply? Minimum credit score is 680. When you go into the bank or something, the minimum credit score is 680. They want 2 or 3 years of your business taxes, 3 years of your balance sheets and income statements, year-to-date profit and loss. If your business is less than 3 years, you want to submit 3 years of P&L projections, current balance sheet, and your resume. So usually you have to be in business for 2 years from any of the banks and other lenders to give you money. Fortunately, with the 2 loan people I work with, and Banger's going to talk about Life Asset, but I work for another company that does stuff all across the country, even in Minnesota. You don't have to have that at all. You can have, if you are a W-2 employee, you can do the W-2. Give us your W-2, and we can give you a loan up to $150,000 business line of credit. So there is some places that you don't have to be in business yet that we can give you a loan. So business credit that does not require a person guarantee. Quill, Granger, Uline, Supply Works, Home Depot. These are some that don't require personal. So you can just use your EIN number and get business starts to establish your business credit. Also, what's the name of the place? Oh, I got it on the tip of my tongue. Where you get your business cards and everything from. What is that, Banger? I can't think of it right this second.
The one that you get what?
Where you get business cards and you can get
Home Depot and Kinko's, FedEx.
Oh no, it's the other place online. They're really big. I can't think of it. It'll come to me. So, question to ask yourself before you apply for funding. How long have you been on your job? How much money do you make each month? What are your monthly expenses? How much money do you have in your checking and savings account? Do you own a house? Do you have investments or any other assets? Have you had credit in the past? How many credit accounts do you have? Have you been denied credit? Have you filed for bankruptcy? Do you have outstanding judgments, property repossessed or foreclosed, and have you made late payments? So I tell people to look at their stuff and honestly say, would you loan yourself money? you know, um, I have people that would send me 3 months of bank statements, and every bank statement is negative. I can't loan you money if I can't see how you're gonna pay me back. So you want to make sure that you have money, because that's what they're looking for. So you never want to run out of money. You want to give lenders the paperwork they need. You want to build relationships based on trust. You want to understand how your scores work. You want to learn to think like a lender. Would I give this person money? And then you want to, anybody that sits down with you and you're asking them for a loan or anything like that, they should be able to explain to you where you understand. And they should be able to sort of guide you along to help you get to where you do understand. And so you can go into any bank or credit union and you can ask them if whatever you're getting. So you could say, if I decide to get a business loan, what credit score do I need? And who do you pull from? Do you pull from Experian, Equifax, Experian and TransUnion? And they could tell you, we pull on all three, or for a personal loan, we just use Equifax. For the mortgage, we do all three. For a car loan, we just use TransUnion, and this is the min score you have to have. That way, at least you know if they need a 680 from TransUnion, and you look at your TransUnion FICO score, and you have a 650, you know not to apply to you, at least you have a 680, right? So these are little things that people don't realize that they can do and go into to find out before they start having people pull their credit, because you can ask them what it is, and at least right then you have more of a chance of getting it, because at least you meet the minimum score requirement. I don't know about the debt to income or anything like that, but at least you'll know that. So does anybody have any questions? Hello?
I have a question about the impact of personal on business credit. I might have missed this. So having a good personal credit to start up, does it give you any benefits in the business side? Because you did say you have to take money, like little bits, pay back, and then you get another loan paid back. But in terms of the score for the business,
So
does your personal credit help in
yes,
starting off?
yes, it does. So your personal credit, because you haven't been in business for at least 2 years, for them to look and see if you really know what you're doing in business yet, they're going to look at how you handle your personal business, your personal side. So they figure, okay, if she's not paying her bills now and it's for her, we know she's not going to do right by her business. So that's what they actually look like. So that's why the score is so high, the 680. It used to be higher. It used to be 720. So it did go down to 680 as a minimum, but they figure if you're not paying back your obligations for your personal, you won't pay back your obligations for your business. So that's why they look at that before they would give you anything. And I've had customers that make a lot of money in their business, but their credit score, their personal credit is horrible. And so they're not going to get a business loan without them looking at your personal credit score. So when you look at applications and stuff, or you go to ask about getting a business loan, the first thing they're gonna say is, what's your personal credit? And I don't care how long you've been in business, they still ask. I have customers that have been in business for 30 years. And every bank and every lender I go to, they ask, what's your personal credit score? And then they want 2 years of taxes. And they've been in business for 20, 30 years. So you always want to pay, and always pay yourself. You know, I run into a lot of business owners that, oh, I put all my money back into the business. Oh, I put it, yeah, okay. Well, how are you living if you're putting all the money back into your business? Why you're not paying your bills? How are you paying your bills? So you want to make sure that, you know, they are, your personal score is good, that you're paying back everything you need to pay back for your personal, because they do look at that, and they always will look at that.
Thank you.
Mm-hmm.
Ms. Vicky, so you said that it go off your personal to apply to approve or deny you for the business. Now that you're approved, or if you're approved, are you personally still liable for the business credit debt?
Yes.
Okay.
Oh, it depends. It depends on how they write it up. Because sometimes it's just for you to qualify for it. And then once they go through everything, it goes to your business and you're not responsible for it. And then sometimes you are responsible for it. So it just depends on what type of loan you're getting and what type of how they're putting the loan.
If the business loan is not business loan or line of credit or credit card, is not reporting to your personal credit.
It depends. So like, even though we give out business loans, it reports to the person's personal credit, and on the credit report it says the name, how much you owe, everything, and then in parentheses it has business loans. So it's not reporting to Dun & Bradstreet or Experian Business. It's only reporting to your personal. After you pay that loan off, then you can get a letter from whomever you're paying, and they would put it in your business name, and then you can send that letter to Dun & Bradstreet and Experian Business and different things like that. So it will go on your personal credit. So like I said, it depends on how the business is set up to report it. And they should explain that to you, whether it's going to be on your personal credit or your business credit.
Are there any advantages or disadvantages of sharing responsibility personally with business?
So the advantage is, if you're paying your bills on time, it's going to help you with your personal credit, and it's going to help you with your business credit, because like I said, you can get the letter at the end of you paying. The disadvantage is you won't be able to put it on your business credit report until you paid it off.
I see.
Any other questions?
So you mentioned that for new businesses that you could still get access to funding even if you're not in operation for up to 3 years. Does
Yes.
that affect the interest rate that you get from the lender, or it doesn't carry too much weight?
It doesn't carry too much weight. It might just cost you a little more for the loan, because you're not in business yet. So it's going to give you a different interest rate, and you might have to pay, like, so one of the lenders that I know of is, I have several lenders, and even though you have a 680 or 700 credit score or whatever, they're going to take from that loan 15% of the loan, or 12% of the loan. So you're going to pay more, but they're taking a bigger risk on you, because they're giving you this money based on you paying your bills on time, but you really don't have your business established yet. You know what I'm saying? So that's why you would have to pay those fees. Where if you were already 2 years in business, you'll be able to go to a conventional bank and get the money and everything. They still charge you fees too, and they might charge you a higher interest rate. So you just have to see and look at all the terms and conditions. Anything else?
Now, that letter that I get after completing to pay my loan, would that help me applying for a business loan? Can I use that as a supporting document?
You can use it, so you can send that to Dun & Bradstreet and to Experian Business. You can send that letter to them, and they will put it on your line of credit, on your what is it called? They will put it as a line item on your credit report.
Okay. Now, the last question the previous person asked. So I'm wondering, as a new business or as a very young, early stage business, can I go with that letter to a former bank like TD Bank or any other bank, or can I go to an investor and say, I have character, I have credibility, here is a document that shows that I've paid off this business loan?
Taking it to the bank is not going to make any difference. Taking it to an investor might.
Okay.
But remember, you want to add it to your business credit. So that way your score will go up from maybe 80 to 85.
I see.
Because you have additional line on your credit for business.
I see.
Mhm.
Now, does missing a business payment that is reported to your business credit, is the law different from the personal one that you just explained that is stayed on for several years? And
so if you don't pay back your business credit loans, then you could they can file on your company for UCC, and so they could either come and take your company, or if you have too many UCC filings on your business credit, you won't be able to get any credit.
wow. So in our communities, those who just arrived, we don't have a credit system. A lot of people try to stay off getting credit at all. Is there any benefit to that or disadvantage to
It's a
that?
disadvantage to that. The United States goes only on credit. So usually anywhere else is cash is king. In the United States, credit is king. So people that's coming over now, they should start to establish personal credit first and then business credit if they start a business.
I see.
And I can help with all that.
Oh, great. So your information will be shared with the group. Any other question for Miss Professor Vicki Davis?
Professor Davis.
Uh,
Professor Banger.
I want to call you Professor, Dr. Biz. I just keep quiet. I just said our speaker. Okay, thank you so much.
You're welcome.
I want to quickly go over the loans at the Nigerian Center that our speaker also recently talked about. So we have a lending program, a micro lending program, both for credit building as also both for credit building as well as your business credit. So yeah, the loans that we have. I want to mention at this time our priority. It's not impossible to get loans from the Nigerian Center if you're outside of the DMV area, but it's a high priority for those within the DMV area. But definitely still reach out to us. As you heard from our speaker, she also has, the organization has a national lending program that we're able to connect you to other resources as well. But the loans that we currently offer are as follows. The Nigerian Center Credit Business and Credit and Business Loans. So there's a business credit and startup loan. The maturity of that loan is 3 years, and it goes from $500 to $25,000. It goes from 0% interest rate to 6% on a declining basis. Pretty much what that means is that whatever balance you have after paying your loan is what the percentage is going to be on, not the entire loan. The requirements for these loans are for those who are women-owned businesses. Currently, you are able to get the loans at 0% interest rate, but you have to be a women-owned businesses. At the most, it's still a single-digit interest rate, so it's still pretty good. The requirements are government-issued ID. That will be your state ID and your driver's license. It has to be issued in the United States. Your social security card. If you do not have a social security card or social security number, if you have a TIN number, if you don't have one, please still reach out to the center. A legal immigration program will be able to help you with getting ID. These loans are within $500 at least to $5,000 are without requirement collateral. There is no application fee for the loan. The loans are open to both new and unincorporated business. Pretty much you can have a business idea. You can still be working. You don't have to have legal document filed for your business. If you live in Washington, D.C., the turnaround will be a lot faster. Non-DMV businesses can also apply too. So this loan is going to help establish your credit. Now, if your credit invincible, you currently have no credit at all, these loans are particularly for you. Again, for those, it starts at $500. The goal is not for you to use $500 for what your needs might be, is for opportunity to establish your credit. And our financial institutions will report those loans to help you establish a credit profile, and report those loans to the 3 credit agencies on a monthly basis, and that way you are able to establish business credit. If you currently are trying to work on your credit, if your credit needs work and you want assistance for that, this loans also can help you do that. You can also reach out to get help to actually repair your credit as well. And this also helps for startup loans. If you have a new business you're starting, again, the business doesn't have to be incorporated. It could be a brand new business. It could be a business idea. So let's talk about the small business loan we have, and that goes up to $250,000. That goes up to maturity for that is 6 months to 10 years at 0% to 12.5 fixed interest rate. The requirements for this are a little bit more extensive than the credit building loan. There is a 6 months personal and business bank statements requirement. Tax return requirements also. Tax return also will be required for 2 years and sometimes 3 years. Collateral is required, application fee, and there's a closing fee from 1% to 3%. There's also a business plan that could be requested or explanation for the use of funds. So this is pretty much the loans that we have. And we tell folks that would desire to have a higher loan for their services is an opportunity to start with our credit building loan to develop that relationship with an investor and to have that accounting, financial statement and story for your business. And we can also provide you, and our financial partners can provide you additional letters or support letters that can help you to qualify for larger loans. So please feel free to reach out to us. How do you do that? You can go to the Nigerian Center website under our small business program, and you can fill out our intake form for the loan program. There is no application fee to fill that form and to provide us some basic information. after which we're going to follow up with you with a program manager to help take the intake of your loan application. And then immediately you'll be put in contact with one of our financial partners institutions. So that is pretty much about the loans that we have. We hope this class has been insightful and educational for you. Please let me know if you have any questions before we close out today.
Thank you. This has been very helpful.
You're welcome. You're welcome. So the recording of this would also be available on the media page, so you can also get caught up with it, and you can also share it to folks as well. I want to thank everyone for participating in tonight's class. Watch out for our press release for the Nigerian Independence Day coming up over the weekend, as well as the opening of our clinic in Washington, D.C. We are so excited about that. So thank you so much. We'll be in touch. See you next time.